Hey guys, Sam here. I'm just going to do a quick update on Dash. I posted this up yesterday as a potential trade. Apparently, some of my subscribers entered the market off of that. And so, first, let me say, primarily, what I'm trying to do here is not give you a specific trade. The point of what I'm doing here is to teach you how to do this analysis yourself, right, and demonstrate it and show you how it can be very effective. I try to make a really strong case to remind you that it's always just probabilities, right? That I'm wrong all the time, and that the key to success here is to be very, very diligent with your risk and money management, right? So yesterday, so let me pull this off here so we can recreate what we had. So why? So I will tell you that long term I am a big Dash bull, right? I think this is a great project with enormous potential long term. But as a swing trader, I try not to let that influence me unduly. I try and just look at what can I see in the chart. So given this move here, this was a reasonable assumption to think that we had a 1-2. Right, and then the assumption being that if we have a 1-2, we're going to go up and try and get into a third and an impulsive structure for a third. So I've got targets way up here. Now, the assumption being if that's a 1-2 and these are good pivots for a 2, that we're going to subdivide into that third. So we get very nice subdivision here. It's very technical. I'm on a 3 hour. So if I take this down to a 1 hour and open it up, right? Let me scrunch a little bit here. So we had excellent subdivision here. So we get a 1-2. We've got good subdivision into our 1-2 there. We get up to a 3, deep 4. Granted, this was, not what I would have preferred to see this stay as an impulse and not overlap the 1, but it doesn't violate any Elliott rules because it creates a leading diagonal, which we can find and expect in a 1 wave. So we get that, right? So with that, we may invalidate the whole thing here as I'm recording this. So there's the typical leading diagonal, right? It's the bull wave, or pardon me, the megaphone kind of pattern, an expanded 5-wave structure, a leading diagonal only found in a 1 wave or an A wave, right? So thus, the assumption had been that if this was a 2 and this is our 1, we're going to want to stay above the 786. Stay above the 7-8. Come here. 6 from that swing low to that swing low, right? Well, here, so the trade yesterday was here, right? Which was, here's the trend line, here's the 618 box. So the trade was this right here at the 618. Here's the upside, but here's the stop, just on the other side of the 65, right? You've got to be able to put your money at risk with that small amount of risk there, given the market's trading technically, given that we know that algos will be buyer. They start at the 50. Here was the first reaction. They buy again at the 618, but they reverse at the other side of the 65. Right? That's typically what they'll do. So you're seeing the acceleration down from that because now they've flipped to the other side. Right? Potentially, we've got a short. So we create the possibility here that this bullish scenario here of a 1-2 is about to be invalidated if we take out this low, which we haven't done yet. But if we do take out that low, then then we have to reconsider that all we've done here is just put in a corrective move. So we may have an A, B, C. You see that? So potentially we're relabeling. So the last stand for support here for the bull case, which I would propose to you now, is from that low to that high. And look where we sit right now. Now, we went to and through it here. We went to and through it by a few ticks, but then a steep reaction away from it, which had me thinking, okay, there's some stop running here. This was really an ugly ABC. I didn't love it, but that reaction was indicative of algo buying, pumping it, then coming back down. So the buy right here was... You got to take that trade. Now, I'm saying that in hindsight. I took the trade. I got stopped out there. I'm long out. But now I'm looking at this again, saying, okay, well, if this is going to hold, could we have could we have a double bottom here? You know, it would not be ideal, but the fact that we're getting this reaction, do you see that? So we're getting the reaction off of the 618. Does that mean that we're necessarily now going to rip here off to, you know, here's the algo target, right? If they're going to get it, there's their target. So, you know, you got to look at that and say, well, am I comfortable with this? Because if I'm buying down here, it's the exact same scenario, except the upside has changed. But you still are a buyer at the 618 with a stop just under the 65, right? So look at the risk reward on that. Let me get it right. And that's just your first target. That's assuming that we don't go to our more likely targets if it's a 1-2. But so that's 14 to 1. Right? You've got stopped out or not here, as long as you've got a valid count here. That is a trade that you got to be comfortable taking. But, you know, you got to have a stop in the market. And if it's not a hard stop, you sure as hell better have an alert on that to know if it breaks like this. Because look how fast that went down. And as is often the case, it'll do that overnight if you're a U.S. trader. Right? So, I mean, if your stops are not getting hit, you need to find a different exchange. Or you got to have the discipline to get up in the middle of the night and get the hell out of the market. Or you just went from being a trader to a long-term investor. And now this is the rationalization. Oh, now I'm a holder because I'm bullish dash long-term. Well, take a look here, right? So we're to-ing through the last stand on prior was that we might get a pivot here. Well, if this breaks, you got to consider the alternate. Okay, so let's take that off, right? So maybe this holds, right? It's certainly swing low to swing high. It's still an internal retracement of that swing. So it has the potential to hold here, right? So this you know, bearish that we didn't hold here, but it could hold at the 618 for a double bottom if we're going to do that, right? So if that breaks, let's consider what happens if you're wrong on that hypothesis, that this is not a 2, that we're going to break this low, then it cannot be a 2. Well, let's take that off. Well, then what could it be? If that's going to be a corrective move, then we would expect it potentially to go no further than the 786. Well, look what's right there. Do you see that? So where's our target now? This is why you got to be out of the market so there's the outside edge. So we may stay well within this pitchfork here. We might be headed down here because here's the algo target on the short side. If this breaks, if this low breaks, odds are very high we're going right here. And we got to relabel the whole thing. Right? Now this is a complex, then you'd have you'd have an A, B, C. So you'd have on the absolute largest degree, you'd have A, well, this would be B, and then you'd have C down here. That's potentially what you're looking at. I didn't mean to have the wave on there, so let me pull that off. But just so you get the idea, right? You got to be prepared to relabel and recognize, well, if it's not this, then it's most likely that. Now, we don't know here, right? So it's interesting that that's holding. So technically, that shouldn't be surprising that you're getting a small reaction. But we got a small reaction yesterday. Same kind of thing, right? So the idea is don't be expect that you're going to get stopped out often, right? That's not going to hold every time. Just because you drew it and you took that trade, well, yeah, Sam showed me that, so I'm in. No, where are you out, right? So that was an incredibly small amount of risk for that potential reward. It's the same thing here. There's an incredibly small amount of risk between the 618 and the 65. But you can't now shy away from that. Now, I don't love this as much because it's not as clean an Elliott pattern. But it may well pivot here. We could see that. So if you're uneasy because you just got spanked on this one, as I did, right? If you just got stopped out here, well, the option is always wait to see some impulsive move there, and then you're not going to miss anything. Then you take the next retracement as a potential 1-2, right? Then what you've done is you've got evidence that you've got a reasonable pivot down here because it's technical, right? It's at the 618. That technical, I would rather see it at the median line, but if we're going to stall right there, I understand why it would pivot there. Now, if I understand why, I'm going to look for a reaction to it. It might go all the way to the outside edge, and then I'm doing this. So if I want to be more conservative, then I'm going to wait for the next 1-2. knowing that if it goes deep, I'm going to do the same thing. I'm going to draw swing low to swing high. I'm going to look to be a buyer between the 50 and the 618 with a stop on the other side of the 786. Or if you want to be more precise, you're a buy at the 618, stop at the 65. Right? That's trader's choice relative to your account size and your risk tolerance, etc. But you know, I guess the broader point is, you got to be able to pull the trigger there and understand that it's a very small amount of risk for the potential reward. But if it repeats down here, you know, it's the time that you don't take the trade that it'll rip. That's just the way, that's the perversion of the market, right? Because it's the battle is between your ears. If you're not comfortable with that, that's no problem with that. I'm not saying you must take that trade. What I'm saying is, if we pivot there, now you know why, right? We're pivoting at the 618. And if we go through, we know where the likely target is because there's the 786 of this B wave, knowing that a B wave can go anywhere from the 50 to the 786. We go to the 786 to the tick. So given those three dominant pivots, I would certainly do this. I'd look at that and go, okay, well, you know, could we go there? Do I need to modify this? Do I need to put a shift on that to make that make more sense? So I'd go over here and I'd look at that and go, shift? Well, that's too much, but that's kind of interesting. Look at that. So now I've got this framed with that shift pitchfork, but I get kind of an interesting hot box down here. I've got confluence of the lower parallel to the shift median line. Remember, down 50% in price. Do you see the 50 right here? Right, down 50% in price. So if we're going to break here, that's a logical place to look to be buying. Now, if it breaks there, look here. So we still could potentially have a 1-2 on the largest degree. We'd be moving the 2 over here for potentially an ABC right there. We still could maintain the bullish count because now if that's our 2, we're going up here. But you got to be prepared to adapt to what the market is offering and where it's pivoting. And you can't cry about getting stopped out because the relative risk there, hopefully you manage the risk. Right, you're going to get stopped out all the time. Get used to it. Welcome to trading. All right, how am I doing? How am I on time? That's 12 minutes. Okay, let's go over and look at this on Dash because we also looked at it on Dash, and it's setting up rather nicely here. Pardon me, on Dash to the dollar. This is on Polo. So again, right? We looked at this yesterday, and my comment was, there's too much noise up here. I don't know what the hell we have going on here. That's just ugly, and that's a 2-hour here. So I've expanded it to the 2-hour so we can see where we are. So if I scrunch this up, right, again, this has been very, very technical. Lots of algo footprints in here. So if we've got the count right, which it's been very technical, so it wouldn't surprise me that we've got 3-4. Well, we're looking for a move up to the 5th, right? Well, this is all relative to the degree. Let me see if I can. I guess I can't scrunch. I got to go to a 4-hour to get that, so you can see it. Okay, 1, 2, 3, 4. Here's our 1. Potentially, right? There's a reasonable target. So, as I've done previously, if I'm going to wick that, I'm going to go to my absolute low where this started. This is the bottom yellow line. I'm going to go to my 3. I'm going to project from my 4. Well, look at this. So here's my 1618 175 box up here in line with potentially the algo target here. So I get a hot box up here that may be potentially a 1/5 of a 1/5. All right, it certainly would be, you know, a reasonable spot. That certainly makes good sense. And again, I'm not saying go jump in the market right now. The point of this is for you to understand what I'm doing here, and so that you can do it yourself. Right? It's not rocket science. I've got a 4-hour chart. I'm going from the last low to the most recent high. I'm looking for an internal retracement. I know potentially for an Elliott count, likely support zone for a 4th is between the 38 and the 50. Right? Do you see that? So thus the first buy at it, right, at the 38, front running by a few ticks. I've got some prior resistance here at this swing high that may offer some support. So there's a potential buy. It may be that it's just going to be front run. May be that we miss it. This is where I'm trying to buy it. I'm trying to buy it here, and then I'm going to add more here. Right, but I'm not you, right? So you got to manage this based on your own risk tolerance and your own comfort level. You know, if you're just learning this, paper trade it until you get comfortable with it. Don't put money at risk just because you saw something I showed you on a video. You got to understand it, and it's in the understanding of it you understand, where am I wrong? How do I relabel it? If it's not this, then what is it? What could it be? If this is not the right roadmap, what else could be happening? Could we have topped here? Well, it's possible. Is that the odds play? Well, if we're breaking down here, yeah, we put in it's not a 3. This will end up being the 5. Right now, it still remains potentially a 3. We're coming into a 4, but we don't know. Is it going to pivot at the 38 or the 50? So the way I will approach it, I'll take a small bite here. This is for members. I would give that a little bit more room, but I'm not. So the idea is here, I'm going to take a small position here because I can afford that. If that happens, that's not going to kill my account. I can afford that kind of risk on a small position, knowing that I'm going to average it down just a little bit here. Right? So I'm going to average those two. So I'm going to end up with an entry price somewhere right about there, with this as my target. Right? So if we scrunch that up and let's say we split the difference. Let's see if I can do that. Can I do that? No, I have to redo it. So if I do it this way, so I split the difference. Okay, so my average price now, there's my target up here. Here's my stop here. All right, so I'm just under the 65. So there's 3.5 to 1 on the averaged in price. But if it stalls at the 38, at least I'm going to get a small piece of it. Do you understand the thinking there? Right, and it may be that I'm just not going to get a fill. It may be that it's already been front run at the 38, and now we're just heading, now they're going to front run it there, and now we're going to head up here. We don't know. But again, I just do. It's the discipline. I'm willing to buy it there in a small incremental amount. I'm willing to buy that. I'm willing to add there because I know what that means to me in P&L if I'm stopped out, and I can handle that. Right? So again, you don't need to load your account, load up here. This is take a as I like to say, a little appetizer here. There's your entree, right? Here's we had a bad meal. All right, guys, I'll stop it there.